Stocks surge and tech stocks take the lead and earnings are being upgraded. What a difference a day makes, with U.S. stock market surging. For sure the remarks coming from Delta helped, but this was on the back of the strength of tech stocks. Take a look at the overview table below. The Magnificent 7 or 8, the Magnificent 7 sounds better. Or maybe it is better to say the Magnificent 7 plus. This means that stocks can be added as the AI boom continues to gather force. These stocks, which now weigh more than 28% of the S&P 500, have to move for the index to move. Thus, with TSLA up 3.80%, NVDA up 3.06% and Meta up 3.08%, the SPY closed up plus 1.15%, and the Nasdaq 100 Index QQQ closed up plus 1.75%. Also, keep in mind the mid to small cap stock surge higher with Russell 1000 iShares ETF, IWB, up 1.16%. The Russell 1000 stocks are also being upgraded and the PE ratio for 2024 sits at around 13x. Take a look at the most active stock options table. These are the major stocks being TSLA, AAPL, NVDA, AMZN, AMD and Meta. All having the volume of call options outweighing the volume of put options. Investors are taking a bet that stocks surge higher. Thus out of the money call options, will prove profitable. Consol Energy Inc., CEIX. The top stock pick for Tuesday, June 27, 2023, a new buy signal, with an entry price of $64.82 based on the 20-200-day MACD oscillator for CEIX. Consol Energy Inc. mines and exports high BTU bituminous thermal and crossover metallurgical coal. It owns and operates profitable longwall mining operations in the northern Appalachian Basin. Consol Energy Inc. is headquartered in Canonsburg, Pennsylvania. Over the last 5 years, a buy signal on the 20-200-day MACD oscillator for CEIX has resulted in a gain of plus 703.5%. This is compared to a plus 69.02% market gain on the stock. The signal profit is based on only 2 trades that lasted an average of 426 days. Markets are discounting the probability of a plus 25 BP rate hike at the next FOMC meeting on July 25–26 at 74%. On top of this, the market expects 2 further rate rises in 2023, with a plus 25 BP rate hike by November. Keep an eye on the leading economic indicators, one of which is U.S. durable goods orders. The May report indicated a plus 1.7% MOM increase. This massively beat expectations of a minus 0.9% decrease MOM. Capital goods orders ex-defense and ex-aircraft surged plus 0.7% MOM, above estimates of plus 0.1% MOM. This data series is a better indication for corporate capital investment. Economists rapidly losing credibility now expect a recession in the second half of 2023. If it does occur, I will attend the party because the celebration for finally being right will be massive. Remember, a stopped clock is correct twice a day. The Conference Board's June U.S. Consumer Confidence Index increased by plus 5.7 points to 109.7. This exceeds estimates for an increase to 104.0. The plus 12.2% increase in new home sales in May reached a quarter-year high of 763,000. This was far higher than market estimates for a modest decrease to 675,000. Then the Richmond Fed Manufacturing Index increased by 8 points to -7 from -15 in May. Again, above predictions for an improvement to -12. Keep an eye on housing data. Apart from proving that the U.S. economy is in good shape, the data is reflected in the stock and ETFs to own. On the ETFs to own table, 3 out of the top 5 ETFs are home builders. They include PKB, ITB, and NAIL. On the stocks to own table, again of the stocks listed 3 out of 5 are in home construction. Stocks surged higher, and they include OC plus 2.75%, TOL up 3.26% and BDCN 1.96%. Also keep an eye on the leaders and surprises table. While often the same stocks appear, they do indicate the sectors that are moving. Also possibly other sector-related stock ideas. The Euro Stoxx 50 finished plus 0.58%, the Shanghai Composite Index closed up 1.23%. The Nikkei was down minus 0.49%, for the 4th consecutive session.